The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Business Brief. The Organization for Economic Cooperation and Development, or OECD, forecasts that President Donald Trump's tariff hikes will drag down growth in Canada, Mexico, and the United States while driving up inflation. The OECD cut its global economic outlook Monday and warned that a broader trade war would sap growth further. The Paris-based Policy Forum said global growth is on course to slow slightly from 3.2% in 2024 to 3.1% this year and 3% next year. In the case of a generalized trade shock, not only will U.S. households pay a high direct price, but the likely economic slowdown will cost the United States even more than the extra income that tariffs are supposed to generate. The OECD said U.S. economic growth was seen slowing this year to 2.2% before losing steam next year to only 1.6%. Cutting its forecast from 2.4% and 2.1% previously. But it predicts Trump's tariffs will hit its biggest steel trading partners' economies the most.
In our simulations, the reduction in growth and rise in inflation will be particularly large in Canada, Mexico, and the United States. Another risk is that inflationary pressures resurge and that, as a result, monetary policy will need to remain more restrictive than expected. The high policy and geopolitical uncertainty at present brings with it significant risks to these baseline projections. One risk is further trade fragmentation. A trade fragmentation could result in lower growth and higher inflation by discouraging business investment and increasing costs for production inputs and for consumption.
Well, U.S. President Donald Trump said Chinese leader Xi Jinping would visit Washington soon as trade tensions build between the world's two largest economies. The Wall Street Journal previously reported U.S. and Chinese officials were discussing a possible birthday summit in June that would see the two leaders, who both have birthdays in the middle of the month, meet for the first time since Trump returned to the White House. Xi will be coming in the not-too-distant future, Trump said Monday, while attending a board meeting at the John F. Kennedy Center for the Performing Arts, as he touted a string of recent visits by various foreign leaders.
We had the head of China coming in to top people right underneath President Xi, and he'll be coming in the not-too-distant future. And when we had India last week, we had France last week, and we had a lot of people. We had Ireland, we had UK, and they come in, and I say, how's it looking? They say, oh, it looks much better. You know, that's great.
China's foreign ministry has yet to respond to a request for comment, but Trump also said last month that he would speak with Xi, probably in the next 24 hours, as his initial 10% tariff hike loomed. That tariff deadline passed without any public record of the two men talking. Well, U.S. President Trump must stop making disrespectful comments about Canada before the two countries can start serious talks about future ties. That's coming from Canada's new Prime Minister Mark Carney Monday, after meeting British and French leaders on his first overseas visit amid tensions with the United States. Trump, who is promising potentially crippling tariffs against imports from Canada, frequently muses about making the country the 51st U.S. state. Carney said Canada wanted a more comprehensive discussion and negotiation of the two neighbors' overall commercial and security relationship.
We've called out those comments. They're disrespectful, they're not helpful, and they need to stop before, and they will have to stop before we sit down and have a conversation about our broader partnership with the United States. We take our own decisions with respect to our bilateral trade relationships with the United States. We're not trying to organize a coordinated retaliation. Other countries will take those decisions. For example, what we can do are a series of measures, and there are limits ultimately to this, but there's a series of measures that have maximum impact on the United States and minimum impact on Canada.
On a separate note, Carney said it was prudent and in the interest of Canada to review and seek alternative options to a $13.29 billion contract for 88 American-made F-35 fighter jets from Lockheed Martin amid a trade war with the U.S. Toronto City also excluded American EV maker Tesla from incentives for the adoption of electric vehicles. Israeli Prime Minister Benjamin Netanyahu vowed his government would go after Hamas with increasing military strength as Tel Aviv launched a series of military strikes overnight across Gaza, and a nearly 2-month ceasefire appeared to be quickly falling apart. Palestinian residents reported multiple Israeli airstrikes in several areas of Gaza early Tuesday, and an Israeli statement confirmed that attacks were taking place throughout the territory. Hamas-run health ministry said 44 people had been killed, but local reports suggested that estimate would climb. The Israeli Prime Minister's office said in a statement that the move follows Hamas's repeated refusal to release hostages, as well as its rejection of all the proposals it has received from the U.S. mediators, and that Israel will, from now on, act against Hamas with increasing military strength. The raids shattered a shaky ceasefire that had caused 15 months of fighting, which devastated Gaza. The bombardment is the fiercest since the truce brokered by Egypt, Qatar, and others took effect in January. Well, Asia-Pacific markets rose on Tuesday, tracking gains on Wall Street. That's after U.S. retail sales data appeared to ease recession concerns. Hong Kong's Hang Seng Index led gains in Asia on the back of strong moves in tech giant like Baidu, which was up as much as 9.8%. Baidu unveiled a new charging system for electric cars. Meanwhile, Chinese stocks reversed course from losses in the previous sessions. Investors will be keeping a close watch on Japanese markets as the Bank of Japan kicks off its 2-day monetary policy meeting on Tuesday. The central bank is widely expected to hold interest rates steady at 0.5% when the meeting concludes on Wednesday. The BOJ's 2-day meeting coincides with the U.S. Federal Reserve, with the latter also expected to keep interest rates unchanged. Japan's benchmark Nikkei 225 rallied 1.5%, while in South Korea, the Kospi Index advanced 0.25%. You have to pause for a few reminders. The biggest business stories from around the country. The market's closing data are up next. Keep it here on Business Brief, only on the Bilyonaryo News channel. Welcome back to Business Brief. Investor confidence in the Philippines remains high despite the ICC's arrest of former President Rodrigo Duterte. Palace press officer Claire Castro says the arrest demonstrated the country's compliance with international law. Castro adds the Marcos administration is not alarmed by its impact, as foreign investors want countries to comply with the law and not harbor individuals involved in crimes against humanity. French energy giant TotalEnergies is making a full exit from the Philippines, ending its more than 2-decade presence in the country. Sources confirmed to the Manila Bulletin the company has already sold its downstream oil business to Phil Oil Philippines Corp. The deal, which took effect in January, marks a sweeping departure, with employees saying the Philippine office has been abandoned. TotalEnergies also dropped plans to invest in renewables and previously walked away from oil exploration in the Sulu Sea. An economist says while budget deficits are common in developing economies, the Philippines must mobilize revenue, tighten tax collections, and ensure government spending would generate economic returns. Dr. John Paulo Rivera, Senior Research Fellow at the Philippine Institute for Development Studies, says the Philippines faces a pressing challenge: a budget deficit at 5.3% of GDP and a 10% increase in government spending this year. For the country to maintain essential services while ensuring fiscal stability, the economist says the key is in investing in infrastructure and education to create a multiplier effect.
And make sure that whatever spending, whether it is financed by revenue collection or whether it is financed by borrowing, it would generate returns that will allow the Philippines to actually repay these borrowings and finance our recurring budget deficit.
Transport Secretary Vince Dizon relieves MRT3 General Manager Oscar Bongon from his post. He has also ordered the extension of the train system service by at least 1 hour. The changes come a day after Dizon inspected the MRT3 to see for himself how the average Filipino struggles in their daily commute. The train line was also recently hounded by controversy after an escalator malfunction on March 8th, which injured at least 10 passengers. The Philippines secures 637.4 million pesos in sales leads at the Berlin Tourism Trade Fair. This is a 30% increase from the 489 million pesos generated at the same exhibition in 2024. Maria Margarita Montemayor Nograles, Chief Operating Officer of the Tourism Promotions Board, explains the Philippines' strong performance this year as international tour operators, travel agencies, and media representatives find the country more attractive as a travel destination. 29 private sector exhibitors, including travel agencies and hotel operators, joined the Philippine delegation. Key destinations that caught the attention of foreign investors, or rather visitors, include Siargao, Boracay, and Palawan, among others. The increased sales leads from the Berlin Trade Fair signals growing global interest in the country's tourism industry. As more international travelers look to explore the Philippines, businesses in the hospitality, transportation, and retail sectors could benefit from an expansion in tourism revenues, paving the way for economic recovery and job creation in the post-pandemic era. In Pasig, the River Urban Development Project is changing the game for Manila's business and tourism sectors. The Department of Human Settlements and Urban Development tells the Bilyonaryo News Channel, with Phase 3 completed, the historic waterway is now a connected, pedestrian-friendly hub, opening new opportunities for investors. The Pasig River Esplanade links Fort Santiago to Plaza Mexico, links Intramuros, Binondo, and other economic zones. It translates to over 7,000 square meters of prime commercial space, and government projects, projects a 1.5 billion peso economic boost from the increased tourism and business activity in the area.
From different stakeholders, and of course all of those proposals are very valid, pero yung ginagawa nga natin is instead of putting more of the usual infrastructure that people are used to seeing that take many years to construct, what the President and the First Lady are aiming to do is really to create a more pedestrian-friendly, bike-friendly, alternative transportation-friendly pathway along these cities. So that's where the Pasig River Esplanade comes in.
Women entrepreneurs in the Philippines are gaining momentum, with academic group Pinay Girl Boss empowering female business leaders. In an interview with the Bilyonaryo News Channel, the organization said it aims to connect female entrepreneurs with industry leaders and investors. The organization is leveraging education, networking, and capital access to drive women-led enterprises forward.
We believe in continuous learning. So you don't stop with a college degree or a master's degree. There are a lot of skills now that we have to continue learning. And so during the pandemic, we were enrolling in so many things, but usually they are from abroad and they are very expensive. And so we came up with this idea of supporting our fellow Pinay girl bosses by democratizing learning. And that means we utilize the experts that we have here in the Philippines, because there are a lot of mentors here, and it's even better if the mentors are Filipinos creating courses for Filipinos at Filipino-friendly prices. So we created resources like we have free webinars. We started with a podcast. It was a top rating podcast when we launched, and we ventured into e-learning. So we have Pinay Girl Boss Academy with courses at $4.99. So it's just like your cup of coffee, maybe 2 cups of coffee.
With over 27% of small and medium enterprises in the Philippines led by women, organizations like Pinay Girl Boss are catalyzing growth in key sectors such as e-commerce, technology, and sustainable business. That's as studies indicate that closing the gender gap in business could add as much as 1.2 trillion pesos to the economy annually. In the property sector, growing office vacancies are plaguing developers, but for tenants, the glut is providing an opportunity. Details from our correspondent, Sujin Kim, who joins us on the line from Parañaque City. Sujin, go ahead.
Yes, Raine, Metro Manila's office vacancy rate is projected to hit 22% in 2025, up from 19.8% in 2024. This as lease rates continue to plunge, down 40% since 2020. The exit of POGOs and uncertainty surrounding the U.S. elections have further weakened demand. Government agencies and BPO companies are capitalizing on falling rents, relocating to higher quality, LEED-certified buildings with fit-out allowances. AI, data security, and software engineering firms are emerging as new occupiers, but the market has yet to see a strong recovery. While Makati CBD and BGC remain low vacancy rates below 10%, Alabang and Makati Fringe are seeing 33 to 36% vacancy, with 1/3 of office floors sitting empty. Developers have slashed new office projects, with completion rates now less than half of peak 2017 and 2019 levels. Meanwhile, condominium take-up in Metro Manila has slowed, particularly in the mid-income segment due to high mortgage rates. Upscale units in Makati, BGC, and Ortigas remain resilient, accounting for only 5% of unsold RFO units. And those are latest updates from Parañaque City. Back to you, Raine.
Thank you so much for that report, Sujin Kim. In the Philippine stock market, Philippine shares snapped their 3-day winning streak, closing flat to the downside, 0.3%. The main index was the worst performer in the region, with most bourses in the green. Still, advancers edged out decliners 100 to 92, with value turnover a hefty 8.47 billion pesos. Mining and oil recorded a 2% gain, while the financials, services, and industrial sectors dragged the market. Meanwhile, at the foreign exchange market, the peso is currently trading at 57 pesos and 27.5 centavos to the greenback, stronger than Monday's close of 57.30. That's a wrap for today's Business Brief. I'm Raine Musñgi. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. Always on top.